Switch and save. For a limited time, new customers can get wireless service for as low as $15 a month for your first year. Yep, the same exact nationwide coverage as the leading carriers for $15 a month for an entire year. What are you waiting for? Call 1-888-FREEDOM or visit consumercellular.com and use code RADIO15.
See consumercellular.com/firstyear15 for promotional details.
This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston. The Money Matters Radio Network.
This is thanks to dedicated members across the nation. The DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child, plus you, who sold the house, might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and busy week of economic data as we start to get a look at what the economy did during the month of February. Tomorrow we have the ISM Services Index coming out at 10 a.m. Also getting some additional manufacturing data as well, factory orders and things along those lines. Wednesday, Thursday, Jay Powell puts on the purple tie. He heads to Congress to testify in front of the Senate and the House. Also on Wednesday, we get the JOLTS report, the Job Openings and Labor Turnover Survey report. That comes out at 10 a.m. on Wednesday. And then Thursday, we've got data on jobless claims, both initial and continuing, and also a little bit of productivity data coming out for Q4, the final productivity data for the quarter. And then Friday, right into the jobs report at 8:30 a.m., and then next Tuesday, we get CPI. So we're right back into another cycle here. And our top story for the day is from the Wall Street Journal. And it's talking about how, in anticipation of all this economic data coming out, you got traders trying to front-run it pretty aggressively now. Is there anything to this piece, Mike, or is it a bunch of poppycock?
Well, I don't think there's much that anybody can do about it. But this is one of many stories that I'm looking at that I think is speaking to perhaps some of the same effect, which is markets are at all-time highs, and in some ways it might be incentivizing some riskier behavior, even by investors who, the people who are front-running economic data generally aren't trading equities as much as they are sometimes bonds and interest rate maneuvers, and perhaps just the craziness that we have right now with the Magnificent Seven and artificial intelligence is driving riskier behavior across all U.S. markets at the moment. But I don't know. Did you have much of a different opinion or takeaway on this? Because, yeah, people are maybe front-running the data more aggressively than they previously were, but there's a lot of things that are a bit more volatile than they previously were.
I just want to read the top 4 or 5 headlines for today. Traders are betting more aggressively ahead of economic data. U.S. stocks amped up by big tech, better than expected earnings. How to invest in a bull market. Subheadline, with euphoria running high, we talked to everyday investors about ways they are adjusting their playbooks. And the fourth one, the Fed's latest problem, a strong economy. Seems like there's just not enough doom out there, so we got to make some up sometimes. The Fed's playbook and the biggest problem is a strong economy. I mean, look, we've talked about the potential issues with a rebound in inflation. But it really seems like we are reaching sometimes to make ourselves feel bad about the fact that markets are at all-time highs right now. Talked about this back in January. People were freaking out. Do you remember the start of January, Mike? I do. I remember it very, very clearly. Here's what the S&P 500 did to open the year. On the 2nd of January, let's refresh where it finished. December 29th, which was the last trading day of last year, the S&P closed at 47.69.
Okay.
The first trading day, it lost 27 points down to 47.42. The next trading day, it lost another 38 points down to 47.04. The next trading day, it lost another 16 points down to 46.88. 3 straight negative days to open the year, losing, about 1.5%.
Sure.
The pieces that were being published were, the January effect and why this is bad for stocks. Oh my goodness, how are we ever going to come back? It was pure panic after a 1.5% drop. And we're sitting here today, by the way, with the S&P 500 at 5132 right now, proving that all the idiots, quite honestly, I'm sorry, I'm going to call you idiots now, who were panicking after 3 down days, were just writing stuff just to make people nervous about something that didn't actually happen.
True.
And I'm sick of everyone always having to look for, the next shoe's going to drop. It's okay to appreciate when markets are at all-time highs and your 401k balance is the largest it's ever been.
Yeah, there's other pieces today about how some underperforming fund managers are saying that markets are broken now because everyone passively invests. So,
change your strategy because you're not doing well enough.
Let me just ask you a underlying question, though. And this one hit me when I was reading the third story that you quoted there about how to invest in a bull market.
Sure.
This story in particular, this is a piece from the Wall Street Journal. It interviews 5 different. These are not professional fund managers or anything like that. These are primarily individual investors, some that call themselves day traders, full-time day traders.
Anyone who calls himself a full-time day trader hasn't been doing it long enough, because you are neither full-time nor a day trader. If you've actually been doing it long enough, you usually end up losing your shirt.
So I guess my question is, to me, what this read was, I'm back in 2021. What's Roaring Kitty going to be doing on his YouTube channel? And am I going to hear from David Portnoy about how he's a better investor than Warren Buffett again soon? Because there's part of that that's feeling similar to me, that anything I touch on artificial intelligence goes up. I can throw a dart at the wall, pick a stock, and I will make money right now. It's not quite the case as it was back then. There are key differences, but the way that it's being written about is, giving me echoes of 2021.
Well, let me ask you this. If it were, I think it's important. I'm not saying that there aren't parts of this market that are bubbly. There are parts where I look at and I go, that doesn't look great.
Yep.
But how much of the phenomenon that you're describing is just something that is because of different mediums now that previously were not available in other bull markets historically? I always like to say, if we had Twitter during World War II, can you imagine what your Twitter feed would have looked like? It would have just been awful, which is still not as awful as actually going through World War II, which was worse than reading your Twitter feed about it.
True.
But imagine that you have, the ability to have Dave Portnoy putting out pieces in the 1990s as an example. And it's 1996, and Dave Portnoy saying, stocks only go up. Mm-hmm. Well, they still only went up for the next 3.5 years. And so I wonder how much of this is just because we've evolved how we communicate about these things. And this stuff would have been going on in any bull market historically, because bull markets do feel really good. Like, let's be honest, when we're talking about the emotional impact of them.
Yeah, your 401k hits all-time highs. Zillow's telling you that your home's worth more than it ever has been. It does feel good.
It does. And it also doesn't mean that things are inherently going to fall apart tomorrow. When I look at this market and I see that the S&P 500 is trading, 20.4 times forward earnings according to FactSet, I do say, look, that's probably not a stable platform for the next great bull market to take off from, because normally bull markets don't start when you see multiples in that area. But it's also not something that it inherently says that it's going to fall apart tomorrow as well. And this was the point that I made in January when everyone was freaking out because the market had 3 down days to start the year, was, look, this could be something, but it doesn't have to be. And if you freak out about a few days going down in the stock market, you probably shouldn't be in the market to begin with, because you can't handle it.
And to, be contrary to my previous point of how this feels a bit like 2021. There's some justification behind this, right? China's economy, by all accounts, in recession and struggling to come back. European earnings are abysmal, and several countries in that economy, some of the biggest, UK and Germany, expected to be in recession, if not already. And quite frankly, as Bloomberg points out in another piece today, growth in the fourth quarter was, of earnings growth in particular, was 8% compared with worse expectations. So does this have echoes of previous bubbles? Yeah, it does. But frankly, anytime stock markets reach an all-time high, plenty of people out there are making ludicrous statements about, how the other shoe is going to drop or how this will only ever go up and everything looks fine. So there is some justification here. Do things look expensive? Absolutely. Does the United States economy and stock market, or does the United States economy look healthier than just about every other major economy out there? Also, yes.
And it gets back to a question that I asked last week, which was, with the historical track record of stocks, which is, look, if you go out and, look at long-term historical returns, and you say, gee, over, 20, 30, 40-year periods, pretty darn good chance I'm going to make anywhere from like 8 to 12%, depending on the specific point I invested in. What is it that makes people want to say, oh, this is going to be bad?
Not this time. Yeah.
This is going to be bad. What?
Yeah.
I'm trying to figure it out, because historically there's been so much more money made betting that stocks are going to go up in the long run than betting that they're going to go down. And yet all people want to talk about is, well, it's going to go down. Is it just, our bias towards bad news and like we just get hooked on it? Is it we're just I don't think it's because we're, inherently pessimistic or anything.
No, we seem to be a pretty optimistic nation, in fact.
I mean, and the thing that's shocking to, like, I find it strange that I have to be talking people off the ledge on this, because normally I'm the person out there like, hey, you better watch out for this. But that's when, like, there's actually bad stuff out there. Again, the beginning of January, I'm sitting here, I'm going, guys, we had 3 bad days.
The world was falling apart.
And it was, how are we ever going to come back from this? Like, what does this mean? It was 3 bad days. 3 bad days happened in the stock market like clockwork. That's a feature, not a bug. And we're sitting here now, and yes, we're at all-time highs, and yes, stocks look a little bit expensive. But that doesn't mean that anything's going to happen tomorrow. And look, what is this a good opportunity to do in terms of, hey, how do you manage your portfolio in a bull market? Hey, take a look and see if you are taking too much risk because your equities have gone up and they're now a bigger chunk of your money than you thought they were. If you are someone who was saying, oh, gee, I'm going to put this money in the market and hopefully, I can turn it into a down payment for a house. Gee, maybe this is a time where you look at it and say, should I be taking some winnings off the table because things have done well? Like, these are conversations that you can have without saying it's all going to fall apart tomorrow. Because some of this stuff that you read, it's like, oh my goodness, how are we ever going to survive with a strong economy? What will the Fed do? I don't know. They'll figure it out.
Yeah, the Fed has historically faced bigger problems than a strong economy.
We'll figure it out. Let's take a quick break, and when we come back, we'll figure it out after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the important importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
They themselves probably haven't done much wrong, but the latest is about how they might not be able to do what everybody wants them to do this year, which, again, we already know that this is sort of the case. But to recap where we were here, the general expectations for this year were that interest rates come down pretty substantially. In fact, just a month ago, the most likely scenario by year end was that rates were going to be, a full 1.5 percentage points lower than where they are today. That has started to unwind itself a little bit for a number of different reasons, but the primary one just being that The economy looks pretty good. We've been able to withstand higher interest rates for a substantial period of time. The real estate market hasn't fallen apart. The stock market hasn't fallen apart. You haven't seen a whole bunch of new unemployed people. The only real area that we've seen of stress has been in a few of the regional banks that have gone belly up over the last 12 months. And so some are scratching their heads saying, can the Federal Reserve really justify cutting in this environment? And I would say, yes, but it depends on some key data coming in the way that we want. And that's probably not the end of the world.
So here's the thing. I don't know how we can get upset at the Fed for not doing what we don't want them to do.
Say it again.
How can we get upset at the Fed for not doing what we don't want them to do? People are saying, the economy's too hot, like the Fed shouldn't cut. Mike, has the Fed cut rates?
Nope.
Is the Fed saying they're going to cut rates?
Nope.
Is the Fed telling us, hey, maybe you should pump the brakes on thinking we're going to cut rates? Yes. Is the market listening? A little bit, but not much. Why are people getting mad at the Fed for the market trying to front-run cutting? Like, the Fed did not go out and say, hey, we're going to cut interest rates 7 times by the end of this year. The market...
Arguably last year they were getting there.
The Fed took a victory lap, but they never said they were going to cut.
They did not.
In fact, what the Fed did say, if you look at their last SEP from December, the Summary of Economic Projections, they said, yeah, we can maybe get 3 rate cuts this year. Market says, we're going to do 7.
Mm-hmm.
Oh, gee, let's get mad at the Fed because they're being too aggressive in cutting. They haven't done anything. I'm all for complaining about the Fed in like 2021 and 2022 and even the first part of 2023. But right now, when Jay Powell is sitting out there saying, guys, we're not cutting rates. We got to be patient. We're not going to cut rates yet.
By the way, so there's another meeting in 2 weeks and 2 days. March 20th is the next Federal Reserve meeting.
Yes.
I don't believe there's another PCE reading before then.
No, we get CPI and that'll be it.
There is no way, absent some massive shock that dramatically cuts employment this Friday. Well, no, we already know that wasn't the case. So there is no way that the Federal Reserve changes their mind on anything by March 20th.
Markets are pricing in a 3% chance of a 25 basis point rate cut.
The narrative coming from the Federal Reserve is going to be the exact same that we just heard, which is economy strong.
And I find it strange that, once again, I'm in the position of, like, defending Jay Powell. Like, I think he's this paragon of, like, yes, this is... No, like, Jay Powell completely screwed up at the end of 2021, basically all of 2022, and the first little bit of 23. Like, I don't want to have to preface everything I say with, like, well, I didn't like what he did then, because I didn't. But I feel like I have to because I'm being turned into, like, this cheerleader of, like, oh, the Fed's... No, the Fed's fine right now. They're not the ones that are saying cut interest rates 7 times this year. That's the market. Just like last year, by the way. Last year, it was the market that was saying, hey, guess what? We think there's going to be rate cuts by June of 2023. Powell was like, I don't really think so. And Powell was right and the market was wrong. And so we sit here today and...
Well, and the other part to that, though, Chuck, is... A lot of these stories, in my mind, are reading from the context, and oh, wow, if they don't cut rates, then watch out stock market, watch out real estate market, watch out all these different things. That exact same thing happened in 2023, and markets were fine. They were fine. The reason that the Fed won't cut rates is because the economy is going to be stronger than anticipated. That is why the Federal Reserve wouldn't cut rates this year.
Right, you can't have it, but you can't be like, well, the Fed can't cut because the economy's in the toilet. No, that's exactly why the Fed does cut. The economy, like, struggles, cut rates, no problem. I mean, I'll be the first to tell you, if the trend from August through September, July through September had continued into the fall, I would be screaming at the Fed to cut rates right now because unemployment would probably be close to 5%. But
it didn't.
It's not, and thus we have to deal with reality, which is always pesky. Let's take a quick break, and when we come back, we got Wall Street Watch, and then we'll talk about something that is a legitimate long-term problem, continued growth of the U.S. national debt.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
The stock market recently reached all-time highs, but with the volatility we've seen over the last several years, there are no guarantees it'll stay there. This is Susan Powers from the Armstrong Advisory Group. While job growth is strong and inflation has declined, the past few years have shown us how rapidly conditions can change, which is all the more reason for you to have a financial plan in place that is built to withstand the ebbs and flows of the stock market. Our new monthly guide is called Building a Financial Plan, and in it we discuss the process of putting that plan together, including the importance of setting goals from paying off debt to saving for retirement, as well as a variety of additional planning strategies. Call our office at 800-393-4001 to get your new guide today, or you can request it online by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi folks, Susan Powers and Chuck Zodda here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, why is it important to build a financial plan?
Well, I think it's something that can give you some important guidelines as far as what you should be doing on a daily, weekly, and monthly basis in order to be able to hit those goals, and whether those goals are saving $100 into an emergency fund or trying to save thousands of dollars for a college education that may be coming in 15 years, you still need to have a plan for how to execute that on a daily basis in order to get wherever you want to be going.
So we know how fluid life can be, Chuck. What happens if you need to change your plan because your circumstances change?
Well, I think this is one of the most important things, is that a plan is just an initial guide for what you should be doing, but if things do change, you have to adapt that plan as well. So let's go back to what I was previously talking about with saving for college. If the picture for how expensive college is going to be in the future changes because of changes to student loans or things along those lines, you might say that you need to adapt your plan and change your saving strategy, and that's perfectly fine to do if the reasons, for doing so make sense and if the picture is different from when you initially started building that plan.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, markets are mostly quiet, dipping into negative territory to start the week as investors look toward more fourth quarter earnings on deck, including Target tomorrow morning. Testimony from before Congress from Fed Chairman Jerome Powell on Wednesday, and a jobs report upcoming on Friday morning. Right now, the Dow is off by 62 points, S&P 500 off by merely 2 points, and the NASDAQ down by about 0.25%. Russell 2000 is up by 4 points, just under 0.25%. 10-year Treasury yield up by 4 basis points at 4.22%. And crude oil, that is off by just over 0.5%, trading at $79.53 a barrel. Macy's stock currently jumping by 15% following a report that Ark House Management increased its buyout offer for the department store chain to $24 a share from $21 a share, or about $6.6 billion. Meanwhile, JetBlue and Spirit Airlines announced they are officially ending their agreement to merge after a federal judge in January blocked JetBlue's attempted takeover of Spirit. JetBlue shares up by 3%, while Spirit stock down by 12%. Some breaking Apple news this morning, where the European Commission fined the tech giant nearly $2 billion for abusing its market position for music streaming app distribution, favoring its own products over alternatives from competitors. Apple stock down by 3%. Elsewhere, the S&P Jones indices announced on Friday that both Super Microcomputer and Deckers Outdoor would be added to the S&P 500 later this month, replacing Whirlpool and Xeon Bancorp. Shares in Super Microcomputer up by 18%, while Deckers shares are up by 3%. DoorDash up by 4% after RBC upgraded the food delivery platform to outperform from sector perform, citing the company's potential for new partnerships. RBC also upgraded Lyft to outperform, highlighting its confidence in the ride-hailing company's EBITDA estimates and opportunities for food delivery. That stock up by 5%. I'm Tucker Silva, and that's Wall Street Watch.
Mike, you ever think about naming a child EBITDA?
Come here, EBITDA.
Beautiful name. I was speaking with a nurse over the weekend, and I always love hearing just weirdest names. Her favorite was Abe Cede, which was ABCDE, was the spelling.
Oh, sure.
Yeah.
I thought you were going to say that there's one, I forget, it was some virologist who named their kid after a virus.
Ah.
I don't know if it was like,
it's not great.
Come here, strep. Like, you know,
yeah.
I forget what it was.
Strep. Strep.
It's streppy for, you know, that's kind of the diminutive form, but, you know, you could, come here, staff. You know. Actually, no, that sounds more like a dog.
Not great.
It's more like a dog.
I like EBITDA for a dog.
Yeah.
I don't mind that.
EBITDA for a dog, yeah, I mean, if you're working in finance, EBITDA for a dog.
Probably somebody has that.
Now, then you also get to like there's a real problem here when you start naming like your yacht EBITDA. Then it's just, okay, how many Patagonia vests you got? Yeah, what's going on here?
Patagonia on their life vests, actually.
I named my boat the Patagonia vest. We got a real problem here. Let's talk a little bit about the U.S. national debt, speaking of
real
problems. And I'm not one of these people who, you know, sits out there and says, oh, my goodness, the debt's going to, you know, cause, you know, this imminent catastrophe, because that's not really how large sovereign deficits work.
And if you've been saying that since the 1970s, which plenty of people have,
then you've generally been
consistently wrong.
So I think it's important to contextualize what the problem is here. The U.S. deficit is increasing by $1 trillion every 100 days. And why this is a problem is that if you do the math, that means we're going to add about $3.5 trillion to the deficit over the course of this year. And why that matters is not because it's going to cause, again, the U.S. economy to melt down or anything like that.
But again, not imminently.
High deficits never cause an economy to melt down. I say never, but like
rarely.
The U.S. is not Argentina.
Yep.
It's not Weimar Germany. It's not these things that get talked about by people selling subscriptions to get you freaked out about the deficit.
Sure.
What the U.S. does have a problem with is if you're running 6% deficits on an annual basis during a time when employment is as high as it's ever been, when unemployment is running under 4%, then the thought experiment is, gee, what happens if we have a recession and unemployment goes up to 6 or 7%? And how big does that deficit need to get during that time period? And in order to finance that deficit, what do we have to do where does the money come from in order to actually buy said debt? Is it something where the Fed is, buying bonds buying bonds and basically funding the Treasury that way? Is it something where individual investors are, but now that money's not being invested somewhere else and you get this crowding out phenomenon where money goes to pay for the U.S. deficit instead of going into more worthwhile projects? These are things that create long-term drag on an economy and make it less dynamic, which means lower growth and lower innovation. But that is not something where you sit there and say, oh, gee, this is the year that it breaks and the U.S. falls apart. That's not how sovereign deficits work.
Yeah, and it's partly an economic issue. It's partly a political dynamic and issue here, right? I mean, my general theory and philosophy on this is, look, when times are good, especially when inflation is one of your bigger concerns, you don't necessarily need or want the government to be one of the major factors in investment. And that's definitely the case today of expanding deficits, spending a bunch of money during times of economic growth. And there are plenty of people that just say, hey, the federal government should never have any role in that. And, okay, but where you do want that, or where at least I want that government investment to happen, is in 2009, when multiple banks are failing, the unemployment rate is shooting up at a very fast level.
You'd prefer the world to not end.
And you'd prefer that, society as we know it continue. Great, yeah, let's pass TARP and go spend a whole bunch of money. My concern is, as Chuck mentioned, right, the next time you get one of those, the next time you get a big crisis where no one wants to invest, like in April of 2020, like in March of 2020, right? Remember, there were plenty of businesses back in March of 2020 that wanted to borrow a whole bunch of money to stay alive, and nobody was willing to lend them money. Finally, a quasi-arm of the U.S. government stepped in, and all of a sudden people were willing to lend. But there are those periods of time, and that, in my opinion, is when you want the government stepping up and investing in one way, shape, or form. My concern is that if you get all of this spending right now and deficits become so large that foreign buyers of U.S. debt start to get spooked, then at that next moment of crisis, are lawmakers going to be willing to go and spend like they probably should at that moment of crisis, or are they going to say, this is getting crazy, it's too high, and we can't afford to spend at this moment? There's no facts and evidence of that perspective, by the way.
And ultimately, it boils down to, okay, if you want to grow the U.S. economy, how do you do it? I would prefer to not do it through a whole bunch of government spending because it's not sustainable, and ultimately you don't want the government saying, here's how we're going to grow the economy.
Bit of a deck of cards.
I don't believe in a top-down approach. It's not ideal.
See communist China.
Yes, and communist Russia before it decommunized. And is that a word, to decommunize? It should be, because it's a great word if I just invented it.
Decommunize.
It's a great word.
Fundamentally didn't really change how. Well, it did fundamentally change how the economy worked. I shouldn't say that.
It totally.
A lot more capitalism there.
What I want
that
to
is
talk,
a word.
Decommunize.
Mm-hmm.
I'm so
Does it
disappointed
mean
I
what
didn't
we
invent
think
it.
it means?
Remove the features or influence of communism form.
Look at that.
I wish I had been around to invent that.
Yeah.
Now,
See,
can you recommunize?
Yes, it's similar.
Once you decommunize,
it's similar.
You're like, you know what? We change our mind. Let's recommunize.
It's similar to the process of recombobulating yourself
Yes.
after you've become discombobulated.
Got it.
I do want to talk about growth for a second, because when we talk about the actual growth of the economy, remember, there are two levers that you're ultimately pulling. How many people are working, and how productive are those people at any given time? If every person out there, let's say there's two people in an economy, and they both catch one fish. If one person stops fishing and the other person now catches two fish, you still are doing everything that you need for the economy. That one person is just twice as productive. Productivity gains typically are not 100% overnight. It's just not how it happens. So ultimately, when we look at how do you grow an economy, productivity can be, part of the picture, but the biggest lever that you can pull is, hey, how many people do I have working? And so if I'm looking at the best way to grow the U.S. economy at the moment and also solve a whole bunch of additional problems in, kind of the next 20, 30 years, I'm looking at dramatically increasing legal immigration. Specifically, age targeted. People age 18 to 35. Because what I get are two things. Number one, I get a bunch of workers that come in and work, and they do all the stuff that you need to do. Number two, I get a bunch of people paying into Social Security who are not collecting Social Security in the next 15 years. And ultimately, that drives the kind of growth that you want because it's not spending. You're not saying, hey, I'm going to spend $7,500 on a tax credit for EVs. Instead, you are actually collecting tax revenue if you are increasing legal immigration. You are improving the picture for Social Security and all these other programs that already exist. And you grow the economy because you can get more hours worked. That's the lever that you pull, not, hey, let's run 7% deficits. Because you're running 7% deficits at 3.7% unemployment, ooh-wee.
Wait till this economy falls apart.
Right, it's no economy is perfect forever. Not that this one's perfect, but no economy runs at this capacity forever. There's a wake-up call coming at that point. Let's take a quick break, and when we return, we'll talk a little bit of China right after this.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues, and while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zodda from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Piece from the Wall Street Journal: the world is in for a new China shock. Mike, what are they talking about on this?
They're talking about the fact that the Chinese economy is not been doing so well right now, and so
very bad.
The Chinese Communist Party is defaulting back to what they believe is the main way to get themselves out of it, which is subsidize the living heck out of their industrial base, build it up, and export their way out of crisis, which we will see if that is actually what's going to drag them out. But what it does seem to be spelling is a high likelihood of heavily subsidized products flooding global markets, because their industrial base certainly has more capacity to fill than just the demand of the Chinese consumer.
And the one that people are talking about and looking at most closely is cars. Chinese EV manufacturers are ramping up production, trying to get the right licenses to export to different countries, different areas, and that's part of the game plan for them here. I don't know how well it necessarily works in the U.S. It seems like Europe may allow China to quite literally eat its lunch. Like, actually, it's kind of shocking to me where the bread and butter of the European economy is German industrial manufacturing, specifically cars.
Volkswagen, heard of them?
Mercedes, BMW.
Yeah.
I mean, you can go through, but it's like that is the engine of the European economy, pun intended. And for some reason, whether it's compromised politicians, whether it's just a general belief that the Chinese Communist Party does not mean what it says, it seems to me that Europe continues to kind of look at China trying to make inroads into its main industries, and they're like, yeah, that's cool. Do what you want. Like, this is fine. And I don't get it.
Yeah, I don't know if it's a misguided view of environmentalism, that they're saying, hey, we're so desperate for electrification that we're willing to do it at whatever the cost, including
except for keeping our nuclear power plants open. We will not do that.
Right.
Because that would be very. I mean, there's no logical consistency in what Europe's doing.
Regardless, this is a China story ultimately, and I think one of the key differences there's a few key differences, but between today and say the 1990s, when this was also a story, would be that today I don't think there's a whole lot of people who are looking at the Chinese economy and saying, well, at least we'll be able to sell something to that developing middle class in the future. That's not still part of the equation, and so I do wonder about just how this plays out.
Is there anything better than sitting on a beautiful beach, watching the sunset with an ice cold drink? Well, you can experience that right now by booking your next vacation in the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way, and if you head to visitusvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to visitusvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy the vacation of a lifetime. America's Caribbean Paradise is waiting for you, so head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
Mike, did you happen to go see Dune Part 2 in theaters over the weekend?
I did not. I'm intending on watching it on an airplane like I do almost all newly released movies.
Tucker, what about you?
I had purchased a ticket last week. However, something did come up, so I had to bail. But 6 or 7 of my buddies all went on either Friday or Saturday on opening weekend.
What are the reviews from them?
Very, very good.
This I do feel, Mike, is one that's probably better experienced on a 50-foot screen rather than on a 6-inch screen.
I've heard the sound is incredible.
And again, I think that there are plenty of movies where you sit there and you say, "Yep, absolutely fine watching at home." This is one where I think that being able to see a giant sandworm
pop out
coming at me and wondering, am I going to make it? Feels like something I'd like to experience in the safety of a theater, knowing it won't actually happen to me in real life. But this brought in about $81.5 million in tickets in the United States and Canada. That's the estimated take here. It's the biggest opening for a film since Barbie in July. Now, keep in mind, we are very much in the doldrums for film releases. Typically, January, February, March is the worst time of a year to release a movie.
Yeah, this would typically be a summer hit.
The only reason this was pushed back from this was scheduled for a November release.
Oh, yeah.
And it was pushed back because of the writer's strike and the actor's strike, meaning they couldn't do any publicity beforehand, so they wanted to do a few months, then get it out the door, because every day that a film is sitting there is the day that a studio has loans outstanding that, need to be paid back basically once the movie makes money. So ultimately, I think this is something where you're not going to see a trend of, hey, we want to release movies now, because summer is when you see the blockbusters released. The artsy stuff comes out, closer to Oscar season, usually the fall and stuff like that. And this is kind of the dead zone, because it's kind of weird, actually. You would think that February and March are great times to go to the movies because you don't want to go outside. But
so many vacations.
I guess maybe it's because of that. But, again, pretty good opening for a movie where the first one never was in theaters. Remember, the first one came out in fall of 2020.
Oh, it did?
That's right.
First one was fall of 2020, straight to HBO.
I feel like I saw it in the theater, though.
Maybe it came out after that. I don't know.
No, I definitely saw that in the theater. But yeah, you're right. You're right, though.
Yeah, let's take a quick break. When we come back, hour 2 of the Financial Exchange is coming up.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange Quick Tip of the Day. And today, we're talking about the use of life estates and your primary residence. Todd, does the 5-year waiting period for Medicaid eligibility apply to the creation of a life estate?
Well, the short answer is yes, it does. But let me explain why it does. So, first of all, when you create a life estate, again, the general way people do it is they tend to put the remainder interest of the property in the hands of children. I don't like it that way, but that's how they do it, when you could have the remainder interest with a trust. But the moment you put the child's name on the deed and you reserve the right to live there is a completed gift for gift tax purposes. No one thinks of that, but now you technically need to file a gift tax return. And it's that creation of the gift, it's that transfer of that remainder interest in the property to the child for less than fair market value that triggers the disqualification period for Medicaid. So that's why you have to wait 5 years after you create this life estate arrangement in order for the house to be protected from the nursing home. It's very hard to avoid the 5-year waiting period, folks. There's really not too many ways around it.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can get it by calling 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other other and are not affiliated.
Are you retired like me and you just found out you owe the IRS a ton of money? Well, what would your life be like if they took your retirement savings away from you? They can do it and your property. If you owe the IRS back taxes or you haven't filed in a while, the Tax Relief Line is here to help you. They can stop the IRS from taking your retirement savings. If you qualify, you could have your tax bill reduced to zero. That's right. If you're retired and you owe the IRS a lot in back taxes, you could have your entire tax bill reduced to zero due. The IRS has now hired thousands of new employees, so they're ready to come after you. Don't let them take your retirement savings or property. Make this free call now.
800-251-2153. 800-251-2153. 800-251-2153. That's 800-251-2153.
This is the Money Matters Radio Network. WBNW 1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
Do you use the expensive blue or yellow pills to charge your sex life? Are you thinking about it? What if we can promise you the same results for less than $3 a pill? If you're paying $20 a pill for the other pills, you're getting taken to the cleaners. Our pills deliver the exact same results for less than $3. You'll save more than $16 a pill for the same results. And right now, radio callers will get 44 blue or yellow pills for $120 with free discreet shipping. You can save more than $700 off pharmacy prices. Charge your sex life now and save a ton of money. Call now and get your 44 pills and save over $700 and qualify for free shipping. Stop overpaying and call right now.
Paid for by Steel Man Pills. 800-475-8547. 800-475-8547. 800-475-8547. That's 800-475-8547.
If you served in the Marine Corps, by now you know about the contaminated water problem at Camp Lejeune. If you were stationed or worked at Camp Lejeune from 1953 to 1987, you probably have a lot of questions. We have some answers. You could be entitled to compensation. Billions of dollars are being allocated to pay for damages to anyone stationed at Camp Lejeune during that time. Unfortunately, it appears that officials may have known the contaminated water problem existed and did little to protect their men. The Semper Fi code was not honored. If you or someone in your family has developed a serious illness, including various forms of cancer, call this Camp Lejeune legal support line right now. You can't turn back the clock and change what happened, but you can certainly call right now and learn your rights as a Marine. Here's the number.
800-477-1736. 800-477-1736. That's 800-477-1736. Paid for by Legal Alert Line.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit DAVMA.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting DAV5K.Boston and making a donation today. The DAV 5K Boston is presented by Veterans Development Corporation. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
A little bit after 11, it's Chuck, Mike, and Tucker with you, and markets are pretty much stuck in neutral as we get through the morning here. We've got the Dow off 88 points, the S&P's down 3, the NASDAQ down 35, so I guess mildly negative drift is what you could say about your major U.S. indices. 10-year U.S. Treasury up 4 basis points, pretty much reversing what it did on Friday, so really just some treading water here right there. We've got oil, West Texas Intermediate, down 76 cents a barrel to 79.21. AAA national average for gas prices continuing to move up, though. Now at $3.35 and 0.2 cents. That is up about 21 cents in the last month. Probably getting close to the peak there as long as we don't see oil prices move higher. If they continue to hang out in that high 70, low 80 range, we're probably close to the peak. But either way, pretty meaningful bump from, I think, around 306 is where we were hanging out at for much of the winter before this run-up in the last 4 weeks or so. And then we've got gold today, up $20 an ounce to $2,115.60. And so continuing to see a little bit of short-term traction in the yellow metal after also being kind of stuck in neutral for the last few months, hanging out between 2,000 and 2,050 for most of that time. Mike, it's never a bad time to talk about millennials.
And how they're ruining the economy this time.
Well, are they ruining the economy or are they ruining everything?
Good premise, Chuck.
I think that's the question that we should start from is, why are millennials bad?
So, let's not, but there is a piece from the New York Times today about a specific segment of millennials, too. Those specifically built in built.
No, you should have stuck with that,
Just
Mike. That was
those
so
built
good.
in 1990 and 1991. Although
those model years.
It's really born. But in either case, we're talking about...
Final assembly concluded in 1990 or 91.
So turning 33 or 34 at the moment, and actually happen to be the single largest age demographic in today's U.S. population.
So congratulations. If you are 33 years old...
You're you're common.
You are not special.
You're not special at all, even though you were told for a good decade of your life that you were special. You are not. And so the case is made that, similar to other generations in the past, right? This definitely happened with baby boomers, where there were, on average, 1.5 times as many of them as there were the previous generation. In this segment of the millennial generation, there's about 1.1 of them for every member of the generation before them. And so the point is being made that there are economic changes that are occurring just naturally as this group of people ages and moves on to different things. And we're starting to see that play out in a few different areas. I think one of them that we have talked about extensively is avocado toast. I'm joking. I'm talking about colleges. Right, we are seeing, and this was anticipated, but we are seeing enrollment in universities across the nation declining because the next generation is not as large as millennials. And we're also not finding as many foreign students that want to come to the United States to be educated. And so colleges and universities are under stress right now. Another one that I just hadn't really thought of, but the author points out, is wedding venues. Also perhaps struggling here, as many of them were kept alive for a massive portion of the American population getting married, and as the youngest millennials are turning into mid-30s, there's fewer of those happening. That presumably also means that divorce attorneys are about to have a coming of age here, and probably not enough of those out there. But there are a number of different economic shifts that are probably going to still play out as this large portion of the population ages.
This also answers the question that a lot of people probably have been noticing, but the Super Bowl halftime show this year, who was it?
I've already forgotten.
His name is Usher.
Usher. Yeah, right.
Usher.
Yeah.
No, he wasn't, taking your tickets at the Super Bowl. He was actually performing.
Yep.
And the reason why Usher performed at the Super Bowl is because Usher peaked in terms of his popularity 2005 to 2009. That was peak Usher. And if you look at that and compare it to this demographic, these 33 and 34-year-olds were 15 to 19 years old then.
Yep.
And
the glory days.
It is the largest demographic that advertisers want to target. And the best way to target any demographic is to target what was popular when they were in high school, because that's when it's a time not everyone looks back on fondly. I mean, I still remember being stuffed in a locker and this and that,
sure.
And, being hung up and saying, hey, guys, get me down from here. But I didn't sound like that back then, but a little bit.
We both did.
A little bit. Occasionally still do. But it's something where people have really strong memories from their teen and early 20 years.
Sure.
And so the easiest way to tap in and market to them is go back to what was popular at that time. And that's why you're seeing marketing right now that is just slamming people with things from straight out of the late 90s, early 2000s, is because it hits these demographics right on the nose. So unfortunately, baby boomers, Gen X, and increasingly Gen Z, and the next one, which I believe is Gen Alpha, which is what they've coined them.
Okay.
I've also seen Gen AI, which is fine, I guess.
Yeah.
But unfortunately, it's going to be just like when I was a kid, and I was wondering, hey, why is Volkswagen bringing the Beetle back? And the reason why is because my parents came of age during the 60s, and all of them thought really, fondly about, oh, gee, like back in the 60s, like that was cool. Same reason bell-bottom pants came back in the 1990s. You remember that phase?
Yeah. And Pokemon's really popular right now. And
yes,
yeah.
It's you sell to people in their 30s and 40s in the biggest demos you can find. And right now, it's people who are 33 and 34. So the unfortunate thing for everyone who's really far removed from that demo is because this is going to be the largest demographic for like the next 15, 20 years. Just like the baby boomers got to take a 20-year victory lap from their 50s through their 60s, the middle of the millennial generation is going to get to do the same thing.
Yeah, so
it's going to be a 20-year victory lap filled with boy bands, baggy jeans, and everything else from the 1990s.
Yeah, I'm trying to think of what other big... I mean, the nostalgia piece is going to play out in commercials and everything else.
Totally.
But, one piece that also comes to mind is the housing market, right? Frequently getting blamed on how boomers aren't moving out of their homes, but I think what
Which
also
is totally
has to be,
not fair, I maintain.
Also has to be acknowledged that, well, yeah, we also have the single largest age group who's getting to home buying age.
Right.
It's not terribly surprising that housing demand is through the roof. There are likely several other industries that can be explained by this same exact phenomenon of, the largest group of, the largest age demographic is going through different stages of life now.
Yeah, and so this is going to be, this along with the baby boomers retiring, those are the two trends that are going to shape the labor force, the housing market, and any other major economic force over the next decade.
Yeah.
It is an absolutely huge tidal wave of change that is coming here, and I don't think we know entirely how to predict it, because on the housing side, we talked about this a little bit a month or so ago, a lot of those homes that boomers own, yes, like some of them are in desirable places, that millennials may want to move to, but how many boomers are still living in the rural towns that their kids left in search of better opportunities? And their kids are not necessarily going to want to move back to those towns, and so all real estate continues to be local, and that inventory that gets added in, rural.
Let's talk
rural
Maine.
Connecticut.
Maine and Vermont, right?
Maine's
two of the oldest states in the country. What does that mean for the housing stock over the next couple decades? And housing prices over the next couple decades?
It means if you're willing to move to Maine, you're going to have some absolute bargains over that time span. And by Maine, I really do mean north of Portland, Maine. Because south of Portland,
not coastal Maine.
Portland and south is different from the rest in terms of how the housing market works. Because a lot of that can be sapped up by summer rentals and stuff from people who want to drive up from Massachusetts and places like that. You get north of Portland, and it's very much more, hey, do you want to live here and not just vacation here? You still get some of that around, some of the lakes and ski mountains and stuff, but those are, scattered areas, not the majority. And on the other hand, you take a look, hey, if a boomer family passes in Newton, Massachusetts, got to imagine there's two things are going to happen. Either the kids are moving into that property that they otherwise couldn't afford, or that property is going to sell for a boatload and is going to be off the market so quickly that it doesn't even register as inventory.
Including territories, you want the top 10 oldest states by median age?
Can I guess?
Sure.
Maine?
Number 2.
All the New England states are in the top 10, I believe.
Massachusetts is not.
Is it 11 or 12?
No.
Really?
Yeah.
Oh, all the college kids.
Yep.
All the New England states aside from there.
So Maine, New Hampshire, Vermont, Connecticut are in the top 10. Rhode Island's number 11.
I'm going to guess, does Florida not sneak in here somehow?
Florida's number 7.
It is, okay.
Yep.
Carolina? North Carolina?
No.
Arizona?
Also not in the top 10.
So it's not where people are moving to retire. What else we got?
So United States Virgin Islands is actually the oldest territory or state at 45.9 years, followed by Maine, then Puerto Rico. New Hampshire, Vermont, West Virginia taking number 5.
Yeah, should have guessed West Virginia.
Which is tied for Vermont for median age.
Yep.
Florida is number 7, Delaware number 8, Connecticut number 9, and Pennsylvania number 10.
Yep, Pennsylvania
just
makes
beating
sense.
out Rhode Island for the 10th oldest state.
Youngest state, I
territory.
believe, is Utah.
Other than American Samoa, yes.
Well, given that American Samoa is not a state.
Youngest state is Utah.
What's the average age in American Samoa? Or median age?
27.7 is the median age in American
And Utah's
Samoa.
like 30-ish?
31.5.
Yeah. Let's take a quick break here. When we come back, we've got trivia, and then we're talking cheeseburgers right after this.
The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, You can create the vacation of a lifetime, whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John. The USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Hi folks, Susan Powers and Chuck Zodda here from the Armstrong Advisory Group, and we're talking today about our brand new guide for the month of March, Building a Financial Plan. Chuck, when it comes to building a comprehensive financial plan, what components should you include?
Well, I think you have to look at all of the big ticket items to make sure that you're accounting for them. So things like, do you want to retire, and what's the timeline on which you want to retire? What's your plan for housing? Are you planning on renting and just allocating a portion of your income on a monthly basis to rent? Or do you want to be buying a place, and that needs to be one of the goals that you integrate into your plan? Other things might depend on whether or not you have children, like saving for educational expenses or things like that. And then obviously, you might have other things that pop up along the way as well. Smaller things. Hey, do you need to save for a vacation next year? Or things along those lines.
So what's the best way, Chuck, to go about defining your goals?
Well, I think you really need to think about what's actually important to you in terms of how you want to live your life. It's not so much a financial discussion at first, but more thinking about what you actually want to do with your life. So if you say, look, I'd love to spend my time down in Florida more often, okay, that can get you thinking about whether you need to rent a place down there, buy a place, or some combination depending on what your life circumstances look like. So I think that's a great place to be starting.
Folks, learn how you can develop a comprehensive financial plan to help you pursue your goals, whether they are modest or substantial. Call right now to request your free copy of our brand new guide, Building a Financial Plan, at 800-393-4001. That's 800-393-4001, or request your free copy at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Breaking business and financial news first throughout the day. Only here on the Financial Exchange Radio Network.
Trivia brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m., including half-price boneless buffalo wings, half-price spinach and artichoke dip, and half-price warm pretzels dipped in beer cheese. Gather with friends any day of the week at Applebee's and say hello to half-price appetizers served late night, because half off is just more fun. Now, that's eating good in the neighborhood, void where prohibited, dine in only. On March 4th, 1933, Franklin D. Roosevelt was inaugurated as the 32nd President of the United States. FDR's inauguration speech has lived on thanks to one phrase. Trivia question today. Finish this quote by FDR. Quote, the only thing we have to fear, ... Once again, finish this quote by FDR. The only thing we have to fear, ... Finish that phrase. Be the 10th person today to text us at 362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Applebee's. Be sure to include the keyword Applebee's in your text, and we'll give away that Applebee's gift card on Friday's show. 617-362-1385, and the 10th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Piece in the Wall Street Journal, Michael, that obviously caused me a significant amount of consternation this morning. The skyrocketing costs driving cheeseburger prices up and restaurant owners out. What are we talking about here?
Inflation is what we're talking about here, both of food prices and wages, and the struggle that is running a restaurant, which I think has been pretty well documented at this stage, a very challenging business. I have no interest in denying that. There are complexities when it comes to dealing with local towns and their alcohol rules and liabilities from serving alcohol, the quantity and amount of unexpected inflation that you've seen over the last 4 years, and I think most burdensome were obviously the COVID rules that applied in early 2020. Actually, throughout 2020 and parts of 2021, depending on where you operated. At this stage, however, like I recognize that food inflation is still real. I recognize that it's still a tight labor market. I'm just not sure that I'm willing to give all that much in the way of pity to restaurant owners today in terms, like, I guess, what am I supposed to do with this information? Is anyone requiring you to own and run and manage a restaurant at this stage? Is anybody treating you any differently than any other business at this stage? I don't think so. Is it a challenging environment right now? Have preferences changed? Have hours when diners want to, dine out changed? Yeah, all that's true. But unless you're operating in California where you're subject to this new stupid minimum wage law, I recognize that it's challenging. I have empathy, but I can't really get on board of saying, man, we really need to go out there and help those restaurants today.
Well, no, I certainly don't think that you need to be doing anything to subsidize them.
And nobody's saying that.
No.
Nobody's saying that.
Look, restaurant business, talk to anyone who's ever worked in it. It's a hard business.
Yep.
The hours are brutal. The pay is not particularly good. The staff turnover is high. It's a hard business to run. And in particular, what we're talking about here is kind of that middle market restaurant. The places like the Capitol Grill and so on and so forth, they're fine. Mm-hmm. They can figure it out because if they raise prices, their customers don't care a ton.
True.
They
pretty inelastic.
They might look at it and say, oh, gee, this is this much now, but they're still going to pay it.
And their customers haven't been hurt as badly as middle restaurant customers have by higher inflation.
The restaurants like McDonald's, like Wendy's, like Taco Bell, they've got their niche as well. They have higher prices too, and occasionally you see someone who, takes a picture of, McDonald's burger on 84 in Connecticut, and they're like, oh, look at this McDonald's burger, it's $16. It's like, dude, that's a highway rest stop. Like, it's always high. But you can still go out and go to one of those places and get a good meal for under $8. Okay? It might not be the exact same one that you could get previously, but like you can still do this. The place that's hurting is the place where you used to be able to get a cheeseburger. These places that we're talking about, where a cheeseburger used to be $9, and now it's $15, $16. It's like, at that price point, is the customer that used to shop there able to afford that and still come as frequently as they used to?
But my question for that restaurant owner is also, what have you done to adapt to this new economy? Have you changed your restaurant hours? Have you tried focusing more on takeout? What have you done to adapt? Because the economy's changed over the last 4 years.
A ton.
Dramatically. And if you haven't attempted to change with it, and now your business is struggling, I have to say, I'm not surprised. Again, I feel empathy. It sucks. It's a big struggle. But if you haven't attempted to change how you do business, then I'm not surprised you're hurting.
And this is the thing in just about every industry is things are moving very quickly right now. And the problem that restaurants have is twofold. First is that they did struggle a ton in 2020 and 2021. Maybe a bunch of restaurants had to take on debt, and they're just not in a sustainable place right now, which, again, it's hard. The second piece is with how quickly things change because of how narrow the margins are in restaurants. I mean, if you're running a successful restaurant, your margins are like 9%.
Yeah.
Most of them are like 2 to 4%. And so it's, hey, great, we did $1 million in sales last year and I made $40,000 out of it. You do not go into the restaurant business if you want to be wealthy. It's the exception rather than the rule if you end up actually making anything meaningful there. Trying to reinvent that business on the fly, it's really hard because you don't have the margins to play around with stuff and see what works. Let's take a quick break. When we come back, we got the trivia answer and we'll talk.
We are the Debt Destroyer Network. Any debt you have, credit card, tax, student loan debt, call now for free information that helps you destroy your debt. It's great advice. Plus, when you make this free call now, we have Debt Destroyer experts ready to help. They can show you how to destroy your debt and get your life back on track. Debt problems don't have to be overwhelming. You can live stress-free and debt-free. Credit cards, medical bills, IRS tax problems, even student loan debt. Learn about free programs offered by the credit card companies, hospitals, and even the government that can help slash your debt. Call the Debt Destroyer now for free information. Call now. 800-430-8804. 800-430-8804. 800-430-8804. Again, that's 800-430-8804.
To be engaged, you must feel included and valued. The DAV Department of Massachusetts nurtures a culture where inclusiveness is a reflex, not an initiative, where there's a deep sense of pride, passion, and belonging that is unified in our shared commitment, dedication, and patriotism for our country. We know through experience that different ideas, perspectives, and backgrounds create a stronger and more creative organization that delivers better results for the veterans and families we strive to assist. For more information, visit davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Everyone has financial goals, and regardless of what yours are, the process of establishing a comprehensive financial plan is key to achieving them. This is Chuck Zodda from the Armstrong Advisory Group, and our new guide called Building a Financial Plan may help. Some goals are bigger than others, like saving for retirement, but even smaller goals like paying off your credit card debt can be an important part of a well-rounded financial plan. As you build your plan, break your goals down into realistic tasks, establish a savings strategy, or determine an asset allocation that aligns with your risk tolerance. It's also important to create checkpoints to help you monitor your progress and make sure your plan remains on track. Call us today at 800-393-4001 and ask for our new guide called Building a Financial Plan. That's 800-393-4001, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates and your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
Yeah, this is the most common way people create life estates. It seems easy, it seems simple, but it's not the best way to create a life estate. Once you put your children's name on the deed, you give up a lot of control. Like you can't change your mind later if you want to leave it to one child versus another who might be taking care of you later. You have problems if you want to go to sell it, right? You might have the right to live there, but if you want to go to sell it, you're going to need the permission of the children in order to sign off on the remainder interest of the deed. And then even if they do sell it and you get their permission, a larger chunk of the proceeds are going to end up in the hands of the child rather than you. That creates adverse income tax consequences to the child. Plus, you who sold the house might need the money to buy another house or a downsized house or move, all of which create problems. Never mind creditor problems for the children while they're living. Folks, don't do the life estate this way because it seems to create more trouble than it's worth.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. Call 866-848-5699. That's 866-848-5699. Or you can simply request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Trivia question today was not really a question, but it was finish this quote by FDR. The only thing we have to fear is fear itself. FDR's 1,800-word, 20-minute speech highlighted his plan for pulling the U.S. out of the Great Depression, but is remembered today thanks to that one line. Peter from Mashpee, Mass, taking home the Financial Exchange Show t-shirt. Peter's also registered to win a $100 gift card to Applebee's, which we'll give away on Friday's show. And trivia is brought to you by Applebee's. Choose from a variety of half-price late-night appetizers after 9 p.m. because half off is just more fun. Now, that's eating good in the neighborhood. Void where prohibited. Dine in only.
My guess was spiders.
You're not a spider fan?
The only thing we have to fear is
spiders. I was bathing my kids the other day. They were in the bath, and I walked in. My 7-year-old turns to me during bath time and just casually is like, "Daddy, you've got a spider on your chin." And I thought she was like screwing with me. Like that's her type of joke. Like,
but you did?
It's just like a spider crawling up my face, and she just casually mentions that I've got a spider on me.
But here's the thing: if the spider is just crawling up your face, it's clear the spider doesn't want to do anything to you.
Yeah, I still killed it and hurt myself.
And this
in
is
the
why
process,
we have.
'cause
This
I
is
slashed myself in the face pretty hard.
And this is why we have too many bugs.
Yeah.
You know,
I'm the problem.
I believe in.
Hi.
If it were me, there would be more spiders, not the poisonous ones that live in Australia.
Well, in Mike's defense, what would you like him to do? Like neatly grab a neat Kleenex and just gently
walk it outside,
pluck it off his chin?
Like,
but I think if it were me, I'd look at myself in the mirror. I'd say, "Hey, Spidey, how you doing?" And then I would pluck it off gently, put it on the ground, and say, "Happy hunting. Go get some bugs, man."
Yeah, I'll tell you, that was not my reaction.
Because I would rather have one spider in the house than the 100 bugs it eats.
It was the casual way in which she mentioned it that really took me for a spin. But anyway,
snakes, on the other hand, don't want those in the house.
I'd burn the house down.
Don't want those in the house.
Even if it was a garter snake.
Don't want those in the house.
Hate snakes.
I don't mind them outside, but don't want them in the house.
I don't like them on the planet.
They do serve a valuable role as well.
Yeah. Well,
if you don't want mice, get snakes.
Sorry, I brought us down the rabbit hole here, but just thought I would share.
Investors raise Macy's buyout bid. Arkhouse Management, who is a real estate-focused investing firm, they are raising their offer for Macy's from $21 a share up to $24 a share. Macy's stock up 15% in response. Still not trading at $24 a share, so still some thought that maybe they try to squeeze them for a little bit more. But it seems like we're getting closer to some kind of bid being accepted here.
It's pretty wild that this company has just survived. I mean, like, you think about the competition here. Sears, gone. JCPenney, Neiman Marcus, Lord & Taylor, all filed for bankruptcy in 2020. And did anybody think that Macy's was all that different from them?
No, but...
And maybe they're not, and they just managed to survive while the others didn't. And bankruptcy doesn't mean that they're not around anymore. But Yeah, I wasn't sure they'd get this far.
Thing about them, they've been free cash flow positive through this entire time
Yeah.
period. So it's not like they've been, losing money in that perspective. From a profit perspective, they have had some run-ins where they've been unprofitable, most notably during the pandemic for, I think, 4 quarters. But otherwise, it's been a company that, as you know, like they've had profit pretty consistently. It's just declining now, and maybe the ice cube is finally melting. And
the main problem that they've identified, I think, that shouldn't surprise anybody is, they have a lot of underperforming stores, and they, like most other, anchor tenants at shopping malls that were in the same place, served a place in the past where you would go to browse inventory, and people don't browse in person as much anymore, right? Like, browsing is done online, shopping is sometimes still done in person. And so I think Macy's main plan here is to focus on smaller footprints, which again brings interesting questions about the American shopping mall and what that looks like a decade from now. But seems to be identifying that, hey, we want fewer of these anchor stores that take up. I mean, I have no idea what the square footage is of an anchor.
I would guess a
toward
standard
shopping
Macy's
mall.
is probably somewhere in the ballpark of 70 to 110,000 feet.
Yeah.
Like 90,000 square feet feels about right to me.
Yeah.
If you were designing a shopping mall from scratch right now, well, not from scratch. If you had to find a new anchor tenant for an existing shopping mall right now to fill the entire space, what are you putting in there?
I really don't. Yeah, Chuck, I just don't know. I haven't thought about this recently enough. Like, I know a few key features that I think successful shopping malls should have at this point, which is good food options, I think is a piece of that. I guess I'd have to go back to, like, what do 30 to 40-year-olds want? Because those are going to be your main customers now. Like, that's the desirable bucket of people with a lot of money going forward. So what do you want if you're going to occupy that space for those people? I'm not sure. Something for young kids?
What do you think, Tuck?
Yeah, some sort of an entertainment thing, like whether it's some giant like go-kart thing or indoor golf thing, or something all combined. Somewhere we can go out and have adult fun, and somewhere we can bring the kids too, or something like that.
So you think it's about the kids?
But that's just reflecting on my life right now. I'm not sure that that's right.
Well, I was talking to
I certainly don't want to bring my kids to a Macy's. I'll tell you that much.
I was talking to somebody earlier who went to a mall over the weekend where it was an indoor mini golf thing, and he said the place was slammed with kids, and they were just going out, husband and wife together, and they wanted to get away from the kids, but then they went to this place and it was filled with kids. So
things that I wouldn't want, and this is even though they bring traffic in, no gyms. Then you just got a bunch of stinky people walking around.
Yeah.
Don't need that. No one wants to be in a mall where everyone smells because they've been working out.
It's just weird.
You just don't want that.
Setup.
That said, those Lifetime Fitnesses, those giant gyms,
I'm not saying
would fit the bill.
Well, they do offer childcare too, but yeah, something like that, because those are ridiculously expensive, right?
They are crazy. They're like country clubs. But
so you're bringing in a high income shopper probably.
Yep.
So yeah, maybe you do something like that, but I don't want smelly people in my mall. That's rule number 1 of shopping.
Yeah.
No smells. People say, well, grocery stores, that gets, traffic, but those people are just coming in and out and they got their shopping cart and they're like...
And it's just not the right layout. Wegmans tried this in the around here, and they ended up shutting down because nobody wants to put their shopping cart in an escalator. It's just kind of a weird experience.
So you go through and you're like, okay, what would, the ideal retailer look like there? And part of me is like, do you stick a Walmart there? Because, that gets a ton of traffic. But is it, again, so much that's grocery traffic, maybe that's not the direction you go in?
I don't have an answer. The giant anchor tenant space doesn't seem to fit a whole lot of retail. If you've got ideas that I'm not thinking of, I'm happy to hear them. But
if you can divide it in 2, Apple's starting to do some larger stores. I think you stick an Apple store in half of it, and you can make that work, because that's, again, high-income buyer coming through saying, okay, let me pick some stuff up.
It's a big spot, but yeah.
So the new ones that they're building are 30,000 square feet.
Wow.
Which are kind of insane. The original ones were about 8 to 10,000 square feet. I don't know.
Yeah.
I got to think about it some
I actually, just real quick, I saw this, I forget what outlet had it, but you're seeing more IKEAs pop up in malls.
Yep.
That's something I could.
I've never
get
been
into.
in an IKEA.
I think you'd like it.
Is that the one where you have to walk through the whole thing because it's a maze?
Yes.
Yeah. It's like Jordan's furniture.
But
Jordan's, you don't have to walk through the whole thing.
You just tough
get
not to.
You just get lost
Yeah.
and you can't find
Tough
your way
not to.
out.
But you're walking through different rooms of your house.
Yeah. In
Pretty
Jordan's
much.
or IKEA?
IKEA. Whereas Jordan's,
And
it's
Jordan's.
like this is your mattresses, this is your living room stuff.
I love Jordan's, I'll tell you.
Oh yeah. Nothing. I'm just saying it's a little bit different than IKEA. That's all.
The biggest difference is that IKEA, I come home with a 3,000-pound slab of plywood that I have to somehow turn into a house.
Yes, but if you can do it without getting divorced, then it speaks something to your marriage.
I inherited from a buddy I used to live with a bed frame from IKEA, and the worst part of it was it had these...
Oh, the Frankenkugel. That's probably what it's named.
That's not a Swedish word, Mike. That was like German or Danish or something.
It's all similar.
It's not.
The lactopeten. That's what I'm looking at now.
Thank you.
Sure.
That's better.
The mictrical.
But it had these slats that were like tied together with like tent straps that you had to lay flat in order to support the bed, and if you couldn't get them to line up, the bed would just fall to one side, and I would spend hours just before I even put a mattress on every time I moved trying to get these things lined up, and it was just miserable.
Supported by wooden pegs.
Yes. It's just, oh my goodness, how does this, this is not what life is supposed to be.
Yeah.
Meatballs are delicious, though.
I've never had them because I've never actually been in an IKEA. Let's take a quick break. When we come back, we got Stack Roulette.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Thanks to dedicated members across the nation, the DAV programs are far-reaching and the personal rewards fulfilling. Our members are diverse in their interest, which is what has made the DAV so successful. Foremost in our hearts is the goal of assuring benefit entitlement and compassion for our disabled veterans. For more information, visit davma.org. That's davma.org.
There are many ways to protect your assets from the nursing home. If you use a life estate, that can create problems, including the possibility of losing control over your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Is there anything better than sitting on a beautiful beach, watching the sunset with an ice-cold drink? You can experience that right now by booking your next vacation to the United States Virgin Islands. St. Croix, St. Thomas, and St. John are all unique in their own special way. And if you head to usvi.com, you can create the vacation of a lifetime. Whether it's the rich history of St. Croix, the pristine beaches of St. Thomas, or the spectacular nature of St. John, the USVI has a little bit of everything for today's traveler. Upon arrival, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, no passport required, and travel from New England could not be easier. Make your plans now by going to usvi.com. Whether it's a romantic getaway or a family vacation, the U.S. Virgin Islands has everything you need to enjoy. The vacation of paradise is waiting for you. So head to visitusvi.com for more information and to reserve your trip today. That's visitusvi.com.
With the stock market remaining volatile, it couldn't be more important to have a sound financial plan. I'm Mike Armstrong from the Armstrong Advisory Group. There are risks with any investment strategy, and that's why we've written a brand new guide to help you understand those risks and how they can be associated with any financial decision. It's called Building a Financial Plan, and it may help you recognize the potential risks and rewards that are associated with your investment strategy, in addition to offering insight into how to research making the decisions that are best suited for you and your family. family. The guide also provides information on how to establish clear financial goals and what steps might be needed in order to achieve them. Call us today at 800-393-4001 and ask for your free guide today. That number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Life estates are not simple documents and can create the potential for you to lose control of your estate. Cushing & Dolan are experts in elder law and have nearly 40 years of experience helping families with their estate planning. And their new guide, called Calculating the Consequences of Life Estates, can help you make the right decisions about how to protect your assets from probate and the nursing home. Life estates carry a higher risk of income tax penalties and hidden gift issues. And while they can be beneficial in some cases, if you use one, you need to be aware of the pitfalls they may cause. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or request the guide online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. Visit the U.S. Virgin Islands and enjoy your next incredible vacation. Explore St. Croix, St. Thomas, or St. John, and enjoy pristine beaches, world-class dining, and fall naturally in rhythm with the heartbeat of the islands. There's no passport required or money to exchange. Go to visitusvi.com and book your trip today. That's visitusvi.com.
Mike, what do you got for Stack Roulette?
The growing resistance to what's referred to as the MBTA Communities Act in Massachusetts. I know that this is a local, hyper-local issue, but one that is kind of a zoning issue that the rest of the country has been facing as well. In 2021, Massachusetts passed a law stating that if your town or community is serviced by the MBTA, bus stop, MBTA commuter rail station, T station, then you are going to be required to develop zoning rules that conform to this rule, which effectively says dense housing. So apartment complexes, things along those lines. I don't know the exact number of units that are required. I just do know that they are required to be generally available to the public. So it can't just be senior housing. It can't just be housing for this, that, or the other. It does not need to be subsidized or rent-controlled housing by any stretch, but it does need to be dense housing. It's being pushed back on pretty strongly. Milton made the news a few weeks ago, and in fact, the Attorney General from Massachusetts filed suit against the town of Milton for their vote against this Communities Act and refusing to develop the housing or zone it for development. And I guess the piece that I don't know the answer to is what exactly the stick looks like in this case for a town like Milton who says we're not going to do this. But one that generally comes to mind for me is, hey, we subsidize the MBTA, right? The taxpayers of Massachusetts subsidize the MBTA. And if towns are not going to conform to the state law that was passed around zoning, then I don't think they should be surprised if the MBTA says that station is closing. Well, and that seems like a logical step to me that is not extortion or blackmail.
No, and when we look at this, here's the principal issue is that you have towns that, by and large, want to maintain single-family zoning throughout the towns.
Yep.
And not do any kind of multifamily. And look, I'm not going to sit here and say that every unit should be multifamily or that every town should have the same kind of multifamily, because I don't think all towns are the same. But there are a couple of pretty pretty ubiquitous situations that we're seeing in areas that are serviced by the MBTA. Most towns, property prices are through the roof. Am I wrong?
No.
You know, the places that are serviced by the MBTA.
Mm-hmm.
Most of those towns also, as we've talked about at length, they're getting older because younger people can't afford to move into them in a lot of cases.
Yep.
So towns are getting older. tax bases are shrinking, and so property taxes are going up, and you get a bunch of people complaining about how property taxes are going up. The way that you manage that is through denser housing. And I'm not saying this because, like, I don't sit here and say, wow, I would love to live in an apartment. I'm not going to pretend that I'm something I'm not, but I think that when you look at it, especially the type of building that you quite honestly could do if you wanted to that is really good for managing a town's budget, build some dense over 55 communities.
That does not satisfy the MBTA Communities Act.
It does not?
Nope.
How come?
The zoning is required to allow young families to move into it.
Okay, either way, you should still do this because it's a way to actually improve, the town while broadening the tax base and getting this,
I'll be very, very interested to see how this plays out. I totally get it, right? Like, I totally get the communities that are feeling as though zoning is being pulled out from them because it is. Right? That's exactly what is happening here is the state is overriding your zoning laws, and towns hate that. But that is how the state wrote the law unless you're going to get them to overturn it. I'm not sure what the solution is here. And I don't know, coming from somebody from whose town is going to have to probably vote on this and zone on it because we are served by the MBTA, I really have no problem with a few hundred units of multifamily zoning going up in part of town that is serviced by the MBTA.
No, it's something where you can't simultaneously push back and say, well, I don't want my property taxes to go up, and then say, but I don't want any building to happen in my town. With the way town budgets are constructed, that's just not feasible.
I'm sure others would push back. They'd say, no, I want more commercial zoning. I don't want this multifamily. I want commercial zoning.
I would rather have residential zoning than commercial.
Yeah, that's what I.
Because residential, okay, it's night, it's quiet, and you don't have people from out of town who are coming through.
Yeah.
I would always prefer more residential zoning than more commercial zoning if push came to shove.
So I don't know what the stick is going to look like on this.
It's coming, though.
Yeah, I mean, look, Massachusetts filed suit against Milton, and I'm sure there are other lawsuits to come. That's going to be messy. Like, I'm interested in this bill to see if there was an actual just stick that automatically got implemented, and the one that makes sense to me is, sorry, commuter rail is not going to be stopping at your station anymore unless you're approving this zoning.
Yeah,
it seems like a pretty quick fix.
I'll be curious to see how this ends up playing out here. American Airlines today announcing that they are ordering 260 new narrow-body jets, including 85 Boeing 737 MAX 10 planes. I'd be very interested. We're never going to know, but I'd be very interested to know what kind of discount they were able to negotiate with Boeing on this, because this is something
the headline that you want.
Publicly is a very big vote of confidence for Boeing at a time when the 737 MAX program is troubled. This order does also include 85 of the Airbus A321neo, which is a direct competitor to the 737 MAX 10.
I flew on one of those the other day.
So it's something where they're splitting the difference, and this is what a lot of fleets do these days. Is most fleets are not loyal to either of the manufacturers. They mix and match because it gives you more flexibility and more pricing power when you're getting them to bid against each other. But still a big short-term win for Boeing, even if they still have a number of things that they need to fix in terms of the actual production and quality issues of these planes that have been problems, to say the least. We're going to take a quick break for the rest of the day, but the good news, we're going to be back tomorrow, so we'll see you then. It'll be raining. Tune in if you're inside. If you're outside, too, in the rain, listen to us on a waterproof radio, and we'll see you tomorrow on the Financial Exchange.